This is Christian Flanders. Today, he's known as one of the top-performing traders in the market. But before he ever became a full-time trader, he spent more than a decade playing professional poker. In the 2024 U.S. Investing Championship, Flanders posted an astonishing return of 433%, finishing in second place and trailing the winner by only about 15 percentage points. For most traders, that would have been the achievement of a lifetime. But he wasn't finished. In 2025, Flanders returned to the competition and once again finished second, this time with a return of 167%. The difference was that he competed in the Money Manager division, a category reserved for managers overseeing accounts of more than $1 million. When you compound those 2 years together, the result is a gain of more than 1,300%. That's the kind of performance only a handful of legendary traders in history have ever achieved. But the most interesting part of this story isn't the numbers. The real question is this: how did a professional poker player like Christian Flanders become an elite trader, and does he know something that most traders don't? To answer that question, we need to go back to the beginning. When Christian first started trading, he had to learn everything from scratch. His early years were filled with painful drawdowns. Losing money over and over forced him to confront a hard truth: he didn't really understand the market. Determined to improve, he spent thousands of hours studying charts and reading nearly every major trading book he could get his hands on. He built massive model books of his own, collections containing thousands of charts from some of the greatest stock market winners in American history, spanning from the 1930s all the way to the present day. He wanted to know exactly what happened before a stock advanced 200%, 500%, or even 1,000%. What did those winners look like before they made their biggest moves? After years of studying market leaders, Flanders reached a point where he could recognize A-plus setups almost instinctively. So what were the A-plus setups that Christian loved to trade? The first was the VCP, or Volatility Contraction Pattern. In this setup, price swings become progressively tighter while trading volume continues to dry up. That tells you that supply is gradually disappearing. And when supply dries up and demand steps in, stocks can move explosively. The second setup was the high-tight flag. It's one of the rarest patterns in the market, but also one of the most powerful. A stock makes an explosive move higher in a short period of time. Then it consolidates very tightly near its all-time highs before eventually breaking out on heavy volume. But Christian's favorite setup was the third one, the episodic pivot. These are stocks experiencing an event that completely changes the market's expectations. It could be a massive earnings surprise, a breakthrough technological innovation, clinical trial results that far exceed expectations, or a game-changing new product. After a company releases this kind of extraordinary news, Christian wants to see the stock gap up at least 10% and trade on record-breaking volume. Christian has a particular fondness for stocks sitting in the upper right corner of a chart. That may sound simple, but the philosophy behind it runs deep. When a stock is trading at all-time highs, every historical resistance level has already been cleared. There are no trapped shareholders overhead, no lingering selling pressure from the past. At that point, almost everyone on the boat is sitting on a profit, and they're all rowing in the same direction. Christian is also extremely selective when it comes to stock selection. For years, he has rarely traded a stock with a relative strength rating below 98. He wants to own only the strongest stocks in the strongest industries. Next, let's break down a few of the trades that generated the majority of Flanders' profits. We'll start with NVIDIA, a stock that accounted for a large portion of Christian's gains in 2024. From late 2023 into early 2024, NVIDIA formed what was almost a textbook VCP, 4 consecutive volatility contractions, volume drying up with each pullback, a tight price structure forming on the right side of the base, and most importantly, the stock was trading at all-time highs. Christian began building a position as the stock tested its 50-day EMA. He then increased his exposure aggressively on the breakout. Eventually, he committed his entire account to the trade, and he didn't stop there. He also used 2-to-1 leverage. His stop loss was placed just below the low of the breakout day, keeping the actual risk on the account to roughly 1%. Christian took profits after Nvidia advanced about 40%. Thanks to the leverage, the trade generated roughly an 80% gain on his total account. Most traders would consider that a perfect trade. Christian didn't. He viewed it as a disappointment because he sold too early. Had he simply held the stock and used the 20-day EMA as a trailing stop, the gain could have reached roughly 160%. In trading, finding a great entry is difficult. Holding a winning position long enough to maximize the move is even harder. After backtesting his entire trading history, Christian came to an important realization. If he had used the 10-day EMA as his exit signal, his overall profits would have been 24% higher. And if he had used the 20-day EMA as a trailing stop to stay with the biggest stock market winners for longer, his portfolio performance could have improved by as much as 145% compared to his actual results.
Another major winner for Flanders in 2024 was SMCI. He considered it a rare A-plus setup because it combined the two most powerful elements of his trading approach, a near-perfect VCP and an episodic pivot. The catalyst came when the company unexpectedly pre-announced earnings that were far above Wall Street expectations. The news triggered a massive gap up and sent the stock breaking out to new all-time highs. Prior to that, Flanders had established a small starter position around the 50-day EMA. Once the stock confirmed the EP breakout, he quickly scaled into a much larger position. His primary entry came at the high of the opening range on the 1-minute chart, around $36 per share, while his stop loss was placed below the low of that day's trading session. The trade quickly generated a substantial profit. However, Flanders exited around $68 because the position had grown so large that managing it became psychologically difficult. Had he used the 10-day EMA as a trailing stop, his exit would have been around $73, and had he used the 20-day EMA, his exit would have been near $91, equivalent to roughly a 150% gain from his original entry. In 2025, Christian Flanders' biggest winner was ABVX, a trade that accounted for more than 40% of his total profits for the year. The stock opened with a massive gap up while already trading at all-time highs, surging as much as 586% above its prior base. Trading volume exploded to the highest level since the company went public, driven by positive Phase 3 clinical trial results for one of its drug candidates. Recognizing it as an exceptionally high-quality episodic pivot, Christian moved in aggressively. He entered at the high of the opening range on the first day, allocating roughly 15% of his account to the position. As the stock continued to confirm its strength, he added another 10% and later an additional 30%. After multiple rounds of pyramiding, his total position eventually grew to approximately 60% of his entire account. Once the position was fully built, Christian raised the stop on the combined position to the low of the final add-on day, effectively reducing his risk to a minimal level. Eventually, he exited when the stock closed below its 50-day EMA. From the initial entry, the trade produced a gain of more than 80%. With a position size that reached 60% of his account, this trade generated an enormous profit and became the single biggest contributor to his performance in 2025. It also perfectly illustrates his core philosophy. You only need a handful of truly exceptional opportunities each year, but when the odds are heavily in your favor, you have to be willing to bet big. After more than a decade of playing poker professionally, Christian Flanders still approaches trading with the mindset of a professional poker player. In poker, no one knows for certain whether they'll win or lose a hand. That's why great poker players are willing to fold early when the odds aren't in their favor, protecting their chips for better opportunities. Trading works the same way. Before entering a position, nobody knows whether a trade will be a winner or a loser. That's why risk management has to come first. Money in trading is like chips in poker. As long as you still have capital, you can stay in the game. Once the capital is gone, you're out of the game. Christian follows a risk management framework known as the Adjusted 5R rule, designed to limit maximum monthly drawdowns to roughly 5% of the account, with 1R representing 1% of account equity. He also applies a principle called progressive exposure. When his recent trades are underperforming and failure rates rise above normal levels, he quickly reduces both position sizes and trading activity to protect capital. On the other hand, when trades are working well and the market is presenting high-quality opportunities, Christian becomes much more aggressive with his position sizing. It's very similar to poker. Professional players place their biggest bets only when they're holding strong hands. Christian does the same thing. He commits significant capital only to A-plus setups when market conditions are favorable, as we saw in the NVIDIA, SMCI, and ABVX trades.
Conclusion. Every year, Christian Flanders places hundreds of trades, but the vast majority of his profits come from just a handful of exceptional opportunities. In 2024, nearly all of his gains came from his 5 biggest winning trades. Without those trades, his account likely would have finished close to break-even. The NVIDIA trade alone, where he committed his entire account and used 2-to-1 leverage, accounted for nearly 80% of his total profits for the year. In 2025, the same pattern repeated itself, with most of his performance coming from his top 5 trades. What's even more interesting is that those profits weren't generated consistently throughout the year. Most of the gains were concentrated in just a few months, particularly April, August, and September, while many of the remaining months were either losing periods or produced only modest returns. That highlights a reality that many amateur traders overlook. Even professional traders don't make money consistently every day, every week, or every month, the way social media often suggests. Most of the time, they're either breaking even or taking small losses. The really big profits tend to come during just a few weeks or a few months each year, when they find A-plus setups and the market environment is working strongly in their favor. If you've been struggling in the market, jumping from strategy to strategy, watching profits disappear, and still feeling unsure about what actually works, then the trading program I'm running right now was built for you. On the screen in front of you, you're seeing the real results of my students. Many of them have become consistently profitable, passed funding challenges, and now manage capital with confidence and discipline. In the past, students paid thousands of dollars to attend this training in person, but today, I'm making the entire program available almost completely free. You only pay $25. That $25 is not tuition, it's commitment. To be completely transparent, after YouTube's 30% cut and taxes, I barely receive anything. But I didn't make it free for one simple reason. When something costs nothing, people don't take it seriously. When there's even a small cost, they show up, stay consistent, and actually do the work. $25 is the price of a couple of Starbucks drinks, yet it could save you years of trial and error and potentially tens or even hundreds of thousands of dollars in trading losses. I've opened the door. The only question now is, will you take it? You can join through the YouTube membership program or click the link in the video description.